What's going on, guys? Welcome back to another video. Today we're putting two funds toe to toe. This is Hamilton ETF's HDIV up against Canoe EIT's income fund. Now, these two funds, I've seen them compared. They're both broad-based North American funds, income oriented. HDIV has not been around as long as Canoe EIT. So in this video, we're going to kind of go over things, see how they stack up against each other, and check out some total returns and see which one's actually outperforming. Now, this is straight off Hamilton ETF's website. HDIV's boasting over a 10% yield. Highlights here, it has outperformed the S&P TSX 60, and it's a portfolio primarily sector covered call ETFs with a mix similar to the S&P TSX 60 with 25% leverage. Now, it does boast attractive monthly income. It has a great history of dividend growth actually over time. And it says right here, the objective is to provide attractive monthly income with long-term capital appreciation. That's great. That's exactly what I look for investments in my portfolio. You can see some total returns here. Year to date, 26%, 1 year, 30%, 3 years, 25%. And here's just a chart of the growth. Now, there's some things that will set the two apart here. You can see with HDIV, the top two holdings are financials with HFIN and HMAX. And then you've got that US exposure to their technology stocks with QMAX. So let's jump over to QMAX and check that out. So QMAX is almost at 11% yield, and let's see what their holdings are. This is what's going to set apart HDIV from Canoe EIT, in my opinion. You've got Tesla, NVIDIA, Palantir. You guys can see all the big names here, Microsoft, Apple, Netflix. You got some great diversification of some good technology companies in here. These are US companies, right? Now, this, in my opinion, is what sets apart HDIV from Canoe EIT, because their holdings start to really get a lot differentiated after this. They've got gold producers here in HDIV. They've got energy. They've got utilities. They've got their day max with C day and Q day down at 2%. They've got real estate. So you guys can see HDIV is a very well diversified fund. Okay. Now, the other thing about HDIV, it's very popular, about $1 billion in assets under management. Okay. And its risk rating is set at medium. All right. It's kind of just a broad overview of HDIV. The last thing we'll look at HDIV is their dividends. Now, you guys can see here, there was a dividend increase. There's already been a couple increases this year. You guys can see the chart here. And if we go back, they started at 11.75, went up to 12.50, right? Went up to 13.50. You guys get the idea. It's only gone up with HDIV. Not to say that it couldn't go down, but it's only ever trended upwards, which is a great sign. And HDIV has been around since 2021. Now let's pop over to Canoe EIT. Okay, what does Canoe EIT here say? It is one of Canada's largest closed-end funds. It's income-oriented, diversification across sector and markets, risk management. Okay, disciplined bottom-up investment process, right? Monthly distributions, great. And then they do have this annual redemption feature, 10% of outstanding units, up to 95% of NAV. Okay, and here's what it's trading at. Okay, about a 7.78% yield right now. And they've got almost 3 billion AUM. So this is a very popular fund as well. And let's look at their holdings now. Their holdings, you guys will see right here. This is what kind of sets things apart. Their holdings are quite a lot different. They've got, big names like Visa, RBC, American Express. They've got Canadian stocks like National Railway. They've got Royal Bank, right? ARC, Canadian Natural Resources. So these are their top 10 holdings. And you guys can see here, like, it shows their sector allocation. Information technology is only 8%. They don't have a lot of these kind of higher growth, US tech funds. And if they do, they're going to be somewhere below their top 10 holdings, hidden, buried in the portfolio. So the top 10 holdings, that tells me these are what they want to kind of drive their portfolio. And these are all great names, in my opinion. These do change out from time to time. If you check their website, they kind of shuffle things around from time to time. Now, let's actually check out their total return, because I know that's kind of going to be the benchmark for how these funds perform. Yes, they're both, broad-based North American exposure, but different ways and different management styles of these funds. So what I did is actually went to the stock channel here and I plugged them in. So this is the interesting thing here that I find very interesting. It started from the start date of HDIV, which is 2021. Okay. That was the starting price per share at the time, $16.50, with the trading price today at $20.34. Canoe EIT starting price at $12, with their current price at about $15.42. All right. Now this is charting $10,000, guys. Now this top part here is with dividends reinvested. Now, with dividends reinvested, HDIV actually comes out on top, just a little bit, right? With the average total return at 16.43 and Canoe EIT at just under 16%. Okay, that's dividends reinvested. Now down here is, if you guys would have spent all of your dividends, Canoe EIT actually comes out on top here, just because that share price growth is slightly better. Now, the total return here is showing 71% and HDIV at 67.19%. So it's interesting, guys, because if you would have spent all your dividends, Canoe EIT is slightly better. If you would have reinvested all of them and had them on drip, HDIV's coming out on top. Again, these are very similar in many ways, but they're also very different. I don't know if there's anything else I could compare Canoe EIT up against. I've just seen people compare it with HDIV. And what I personally love about HDIV is that natural dividend growth, guys. You can see it in the chart here, that natural dividend growth over time is important to me as an investor. And so that's why, in my opinion, HDIV takes the cake. But as you guys can see here, this is the total return chart. And, I think it's almost a toss up. They're both great funds. And you see those total returns, HDIV up top here at 90% and Canoe at 86.92. And then even if you would have spent everything, HDIV at 67 and Canoe at 71. So all in all, guys, I think it kind of comes down to your style and your choice and what you prefer. Canoe EIT, they've got a longer track record. They've got more assets under management. They've got, different holdings. And then HDIV, it's on the up and coming. It's, very established in the sense it's got a huge AUM and it's been around now for quite a number of years, but it's not that same weight as Canoe. Canoe has just been around a lot longer. They've got a longer track record. They've weathered some pretty big ups and downs and maintained that consistent dividend. So I think what it comes down to, guys, is what your comfort level is, what your risk tolerance is. And again, the yield is lower, but you get a lot of other things like the annual redemption, if that's something that interests you. You also get a different, fund provider with Canoe. So there's different diversification there. Not financial advice as always, but my pick here would be HDIV, just because I believe that over time there is room for that dividend to continue to grow. And I love to see that over the long run, especially if I'm going to be spending those dividends. Just my 2 cents, you guys. Again, very, very close. When you stack them up, very, very close. It's basically a toss up. It just depends on your preference, you guys. I hope you guys enjoyed this video. I hope this was helpful to anyone looking into either of these two investments. Very similar, but very different at the same time. Hope you guys have a great week. Catch you in the next video.